I'm LindseyBell with Antoine, Gara, and a handful of Berkshire Hathaway shareholders. We're fresh out of the shareholder meeting. Guys, what did you think about the meeting? What was interesting and notable that you heard from these guys?
Lindsey, I think one thing that came out for me was that ripples will go through the bond market as soon as it begins to sense that Bernanke stops easing. So that was, for me, the one notable thing. So
I thought it was a good meeting. It always is every year. I was a little bit disappointed that I feel like Charlie and Warren are kind of resting on their laurels, especially in the first half of the meeting when he was getting questioned about Geico and the competition from Progressive with the snapshot, which is his data gathering. It sounded fairly compelling, at least the way the question was presented. And they only really answered it by saying, hey, look, Geico's growing and we're one of the biggest, and so we must be doing something right. And I get a little nervous when managements kind of say, hey, we must be doing something right, and don't really take competitive threats as seriously as they should. So that was interesting, and I think there was a little bit of buzz about that, amongst people sitting around us, certainly.
Yeah, you certainly don't want your management team being lackadaisical, right? Now, one of the big topics I noticed that we talked about a lot was the succession plan and what happens when Warren and Charlie aren't there anymore. What did you guys think?
I was encouraged, Lindsey. It was interesting to hear them talk more candidly about mortality, use the death word. I don't think I've ever heard it specifically mentioned before. I thought they did a great job with answering the question regarding Howard as non-executive chairman. I personally think it's a great idea to have that split role where you don't have a chairman and a CEO be the same person. It's really good corporate governance, and I think their company's a model of corporate governance personally.
And you all are in agreement with that?
Yeah, Lindsey, I think it's very reassuring. I mean, Warren Buffett and Charlie Munger are incredible business minds, and they are very rational thinkers, and they are very adamant about the fact that the business is slowing in terms of its growth. However, it will continue to perform well after their death, and I'm a firm believer in that as well.
And Antoine, you had some thoughts on investments, right?
Two big picture themes people told us heading into the meeting, where they wanted to see some new commentary on their bullishness for international growth. And it seemed like both Warren and Charlie Munger were decidedly uninterested in places like Europe and Asia. And I think Warren said something to the effect that if he had to invest only in the US for the rest of his life, it might not even make a difference. Another interesting thing that occurred during the meeting was a little bit of contrast between Buffett and Munger in terms of their belief in the health of U.S. banks. Buffett said he thought the banking system was the healthiest in 25 years. Munger actually took a much more skeptical tone, and he highlighted derivatives and securities portfolios at some of the largest banks as a risk.
Gary, did you want to add on to that?
Well, I was going to say, relative to investments and succession, I think one thing people are going to want to see more of in the future is the two future fund managers, Ted and Todd, be more involved in the meeting. People come to see Warren, obviously, he's the center of attention, but at many points I would have liked to have heard about some of the new stocks that they're buying, why Ted or Todd, whoever is buying them, what they see in them, and I think that would be a useful interaction. Shareholders would care, and it would give more comfort that the next generation that ultimately is going to be managing all that capital, that we have some faith in them. Right now we just take Warren and Charlie's word for it that they're good fund managers.
I just wanted to add also, I know Doug Cass of Real Money also, he brought up breaking up the company, and it seemed like Warren, he kind of skirted the question, but he also kind of made the point that that's not something he wants to do. What were your thoughts on that?
Well, I think that company should definitely not be broken up personally. I think that the way that it's structured is that they have an operating income that's supporting their insurance liabilities, and I think that it works really well, and they're able to actually close down various aspects of their insurance operations when the market is slow, and they're able to ramp it back up very quickly. And I think that's what he was alluding to when he's suggesting that it's not appropriate to break up Berkshire.
And I would amplify that point and say, by saying size matters, I think I would agree with that. And Charlie and Warren have always managed the company with the perspective of we want it to be fairly valued, not overvalued. And I think it's short term in thinking to just split it into pieces to get into certain Wall Street analyst buckets, spheres of influence, so that they can then talk more specifically about those particular divisions, but it doesn't necessarily add long-term strength to the whole business.
Well, it sounds like you're all coming out of the meeting still long-term shareholders here, but are you more bullish or just kind of neutral?
Well, I think I'm bullish on U.S. equities. I think that's what that's what Warren. That was one of Warren's messages. I think the U.S. a lot of the stocks still continue to recover from the recession. There's still plenty of stocks that are cheap, particularly relative to other investments like bonds. And as we've seen, and he said, there's a lot of people in bonds that don't want to be there. So I think U.S. equities is still the place to be.
Yeah, I think Berkshire is going to be a good investment for a long time. The issue really becomes at what pace can it continue to grow on that capital base? And, do you buy Berkshire or do you try to mimic some of the new portfolio buys that he does and the future, Ted and Todd, and, maybe try to goose your own returns by getting the incremental without having the capital base?
Right, I agree. I think that Berkshire Hathaway is a great long-term buy. I think that it's something that you can hold on to very comfortably, especially from a risk-return perspective. Charlie and Warren are the faces of the firm, but there's so much depth and so much talent embedded within all of the management and all of the structure of the business. I think that it's a wonderful addition to every portfolio.
And I would agree. I would almost think of it as having the potential to be a one-stop shop for an investor that doesn't want to just index or buy the S&P 500 or try something else. He's getting a basket of good businesses run by a very capable management team with a strong corporate culture. So I remain encouraged, and I would like to see more of Ted and Todd over time, because as the capital allocators, I think the shareholders deserve to get more direct exposure to them.
All right, well, I think that's a good note to end it on. These guys are all still bullish on Berkshire Hathaway shares.